Joining us now to discuss them is none other than ETC Group's co-CEO, Bradley Duke. Bradley, welcome.
Thank you very much.
Glad to see you. So you're seeing institutional interest, institutional confidence in crypto coming back in January, at the start of Q1 2023. And you say that there's interest now in Bitcoin ETPs, exchange-traded products. Tell me, first of all, how can you tell all this? Second of all, and how do you know it's institutional? Second of all, what do you think is causing it?
Right. Well, in January, the numbers were quite impressive. We saw 11,301, Bitcoins flowing into these exchange traded products. And actually at the BTC, which is ETC Group's physical Bitcoin product, we saw about 2,000 Bitcoin flowing in that's in that period. That's the 3rd of January to the 3rd of February, which was pretty impressive performance for ETPs in general. And the quick answer is we don't know exactly the breakdown between institutional. Certainly in Europe, we don't know. In US, there are rules where you can actually see, find out who the holders are and the changes in holdings. In Europe, that's not really possible. But what we do see is we do get indications of who's coming in from, due diligence requests coming in, and that's a good indicator for us that these are players that are entering the space.
So are they're putting in BTC? These are BTCs that they're putting into BTCE. Is it essentially? Are these institutions selling it to retail? I'm sort of, if you could just kind of like clarify on that.
Yeah, well, look, so the units that we issue are physically backed, and so those are the numbers that have been coming in. The retail investors are buying through their brokers, right? So they're just going through whoever their brokers are in the region that they're living in, whether it's in Germany or anywhere across Europe, and so they just added, trade it like an ETF and buy BTCE or whatever crypto ETP they like. And that just shows up in the account. And it's very hard for us to know, to distinguish between retail inflows and institutional inflows. We just see the number of units change.
But I'm trying that 11,000 BTC that you say. What I'm trying to figure out is are those going to exchanges or are those being taken off exchanges? Is it sort of yeah.
Yeah, so the way our product works, BTCE works, is that it's 100% physically backed. So what we have these authorized participants who are creating and redeeming units because our product it's redeemable. So if you do own the security, you can say, I want the Bitcoin, and you can actually get the Bitcoin physically delivered to you. So the way that the Bitcoin flows into our cold storage is via one of these authorized participants who's making markets on an exchange. Either they're going to be, at the end of the day, they're going to be net long or net short, depending on whether, let's say, retail investors or institutional investors are buying, they're going to be short at the end of the day. And then they'll come to us and say, here's Bitcoin, we want another 10,000 units or whatever it is that they want to create more units of the security, in the same way that ETFs are created. And then that where they source the Bitcoin themselves, that just depends on who they set up with, what exchange they're using, or liquidity desk that is servicing them. But ultimately, the Bitcoin will then flow into our cold storage, and the units of the security of the BTC will be issued.
All right, switching gears, I want to get into that FOMC meeting minutes that was released the other day. Both hawkish and dovish sentiments among the participants there in the discussion of whether or not to pause or continue on with the rate hike cycle, though a lot of them agreed that the 25 basis point increase we saw at the beginning of this month was pretty much unanimous. I wonder where you see that headed and how the macro picture will impact ETP products.
Yeah, it's a very interesting period. I mean, we've seen, as you know, we've seen Bitcoin trading from mid January around between $23,000 and $25,000. But then since the middle of February, it's continued to trade in that range. But at the same time, we've seen quite a sell-off in the S&P. I think since the 15th of February, the S&P has fallen 3.6%, while Bitcoin has only fallen 0.5%. So it's quite interesting, because usually Bitcoin responds in a fairly similar fashion to macro indicators that come out, or good news or bad news, to developed market stocks. But I think maybe because Bitcoin had its own idiosyncratic recession last year, that this is an indication that people feel that the worst may be over, in terms of the sort of bad news that we had in the crypto sector last year, and that's why it's more resilient.
All right, Bradley. Thanks for your insights this morning. That was Bradley Duke, co-CEO of ETC Group.